The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. He's more valuable than an Nvidia chip. It's Anthony McDonald. How are you, Anthony?
I'm well, James, but sadly I haven't become 1,000 times more powerful in the past 8 years like those chips.
Well, it's hard to keep up with Nvidia. Well, this week we look at the furore over the Future Fund. We examine the backlash over Rio Tinto's attempts to enshrine workplace equality, and we ask whether share markets are dangerously bullish. But first, Anthony, a lot of our readers will be familiar with Webjet, the online travel website that's been a real pioneer in this market. Now, it's a company that's listed on the ASX, and it recently split itself into two bits, one called Web Travel and the other called Webjet. But just weeks into Web Travel's life as a listed company, they've struck trouble. They've had a profit downgrade and problems with their accounts. Now, Anthony, you are our resident former auditor. What the hell is going on here?
James, this is an audit debacle if ever I've seen one. I can only imagine what it's been like to be on the inside of. There would not be enough green and red pens in the world to explain this one to the boss. So, yeah, like you said, Webjet, it's split into two companies. Web Travel, which is like B2B hotel booking service, and then Webjet, which is the flights one where you can check the cost of a Jetstar flight versus Virgin and whatever. So Web Travel, it's by far the bigger and more valuable of the businesses. And it's there that we lay our scene, James. So it was supposed to have its half-year accounts out on Wednesday this week. It was the company's first results since that split. It comes after the shock profit downgrade, so there was a bit of interest in it. It's a big result. So Web Travel CEO John Gusich says he was so confident the results were locked in as of last Friday that he sent the accounts, the investor presentation, and even the press release to his board members. And he's done this plenty of times. I think this was his 28th result, so he knows what he's doing.
Yeah.
Then on Saturday, they got a message from the auditor 4 days out from results announcements day, telling them, Houston, we may have a problem. We're rethinking about the way that you should account for your accounts payable. So that's all the money that you owe suppliers.
Yeah, okay.
And they thought it might be prudent to change the accounting policy. Now, these sorts of issues, James, they don't normally come up so late in the audit. Normally accounting principles, they're agreed up front. Sometimes you might have a new accounting standard or a new interpretation of accounting standard, and the auditor and the finance team, they'll work that out, in the months leading up to the audit. They sort of agree what's going on. In this instance, though, James, there's no change to the accounting standard. There's no change in any interpretation of the accounting standards. There's no new audit. There's no new audit signing partner. Just for some reason, the auditor, at the last minute, wanted to change the way they did it. So to make the switch, James, the auditor said it would require some hefty adjustments. Think tens of $1 million differences, fiddling around with prior year numbers, current year numbers, and it was really, really, really material. So Web Travel hit the roof. They thought their accounts were pretty much finalised. The auditor's thrown a big spanner in the works, and they straight away had to halt their shares from trading, ran around trying to work out what this issue was, dealing with the accounting policy change, dealing with the size of the adjustments, spent a few days scrambling. And then they worked it out, James. Do you know what the problem was?
Tell me.
Spreadsheet error. So the way that Web Travel tells it, Deloitte just copied the wrong numbers from the wrong cells on the spreadsheet into the adjustments that needed to be made and blew this whole thing out of proportion.
You are kidding me.
So we've had a company that shares were suspended from trading for 3 days from the ASX, James, all because of a spreadsheet error. Now, James, this is Web Travel's version of events. Deloitte, the audit firm, they're not saying boo as you'd expect. This is the auditor's worst nightmare, James. Like I can guarantee you that it would have been a junior in charge of the accounts payable on the Web Travel account. Like, this is not a big ticket item. It wasn't flagged as a key audit matter last year. It does tie in with revenue recognition, which is always a hot matter. But I really appreciate the CEO, John Gusich, explaining Web Travel's side of the story. And I always admire people for fronting up. This is embarrassing for the company. But, the questions linger, James. Like, was this really just a spreadsheet cock-up? Why did the accounting policy change come so late in the in the audit? Why was it never disclosed to the key audit matter in the past? I mean, Web Travel acknowledged they'd been thinking about this. And you can probably tell I'm a bit interested in this one, James. I mean, you can take the kid out of the audit room, but it's hard to get that audit room out of the kid. But anyway, so we get to the end of this week. The accounts still aren't out. Apparently the issue's solved. But I think until we see those accounts, until we see the audit partner's signature on the accounts, we'll wait with bated breath.
And what do investors do in the meantime, Anthony? Do they just sit back and sort of shake their heads?
There's definitely some head shaking going on. So they are going to change the accounting policy. They put out the adjustments. It's a few $1 million here and there, bit of money off retained earnings. So, I mean, it's not stuff that's material to the accounts. But I reckon there's a fair bit of head shaking going on. I mean, the stock was off 4% when it came back on yesterday. The fact it comes so soon after this demerger, James, when the place was swarming with bankers, lawyers, accountants, 2 sets of accountants, tax advisors, the fact it's happened so soon after that, that's very, very, very surprising. And the accounts, James, as you know, they're so foundational to investors, the way they value companies, the decisions they make in terms of buying and selling shares, that this one's an absolute shocker.
All right, Anthony, before we get off this, confession time.
Yep.
As an auditor, did you ever put the wrong number in the wrong spreadsheet?
Mate, back in our day, as I say,
yes.
it was less spreadsheets and more paper and more green and red pens.
Right.
But this would have created such chaos.
Someone inside Deloitte is having a very bad weekend.
Not just someone. There's a whole team, and then they had to run this up the chain in there at Deloitte as well. The way that Web Travel tells it, there's like emergency meetings on the Sunday of like accounting policy principals team to look at this thing, mate. This should have been sorted ages ago.
Oh, mate, things are worrying when the accounting policies principal team gets together on a Sunday. That's we're in a different world then. Yes.
Yeah, totally, James. Now, the really big moment in markets this week, James, came with the release of Nvidia's third quarter results, which some people called the most important earnings report ever. James, did the numbers match the hype?
Oh, no numbers could ever match that hype. I mean, the theory here is that Nvidia's results the most important ever because it's the biggest stock in the world. Mm-hmm. It's now almost 7% of the S&P 500, the big index in Wall Street. Everybody listening to this podcast will own a slice of Nvidia somehow through an ETF or their super fund or whatever. So I sort of get the argument, but it's just so over the top. It's just classic markets. Look, the results were pretty impressive. Third quarter revenue up 94% to $35.1 billion. That's in 12 weeks. Earnings up 103% to $20 billion. So this company's running at 70-odd% margins. There wouldn't be a CEO in the world who wouldn't love that growth and those margins. But guess what?
What?
Market wasn't impressed.
Really?
They wanted more.
Tough
Give
crowd.
us more. Very tough crowd. And Nvidia shares, they're off a little bit. And look, they're at record highs. They're up 220% this year. They can afford to take a little breather. But it just goes to show, Anthony, there's a great comment from Bank of America this week that sort of markets are dangerously bullish. They're extended. Valuations are very high. We're concentrated around a very small group of stocks. And it will just take a little bit of the air to come out of the tires of a company like Nvidia, and we could see the market come off, 10% or something. Now, I'm not predicting that's going to happen. I'm not that silly. And 10%, that wouldn't be so bad. I mean, we're 2 years into a bull market. We're 60% up in 12 months. So, look, the US can afford to take a breather. But just even the European Central Bank was saying this week, everything is so concentrated into a few stocks. If we see them start to crack, that'll spill over not just onto the market, but into the economy. People will feel like their portfolio's under pressure. So, look, I'm the resident bear. I've been wrong for a long time now, but it's just interesting to see how much hype is around so few companies.
Yeah, James, the numbers around Nvidia are just astonishing, aren't they? I was looking at it. If you put $10,000 in 5 years ago, guess what it's worth today?
Tell me.
About $300K.
Oh.
It's amazing. But you know what's also happened in that time, most importantly, revenue's up 12 times, profits up nearly 30 times.
Yeah.
It's growing like a weed. That's what you're paying for. So, I mean, to your point about, if this starts selling off, I mean, I guess the good thing, obviously, the way that these prices have gone up, you have to think there's some sort of bubble there. But at least this time, it's not like the .com bubble where it's like, all right, is this thought going to turn into a proper business? It's like now where it's like, is this proper business going to turn into an absolute man, woman, and child eating machine and complete world domination in the next few years? And at the moment, the market's saying yes, it's going to happen.
Yeah, that's exactly right. The famous company back in the .com era was Pets.com, which had stuff all revenue and even less profit, and was valued, extraordinarily. But this isn't Pets.com. This is a real business with real earnings and a very impressive CEO with a big vision. But yeah, there's a lot of hype, a lot of expectation on the shoulders of one company.
Sure is.
Well, Anthony, let's move to our first topic. And this week, Jim Chalmers created a sensation when he released new directions for the Future Fund, which is Australia's $230 billion sovereign wealth fund. He told it to focus its resources on 3 national priorities: housing, renewable energy, and infrastructure. Now, those are pretty important areas for the government. We've been talking about them all year on this podcast. Mm-hmm. But the Future Fund, which was set up nearly 20 years ago, has never had this sort of direction from government. There's been bipartisan agreement that it should not be directed at specific areas or investments. Chalmers says this is merely a tweak, nothing major, just part of the Future Fund being, and I quote here, the best version of itself. But the critics are furious. And Anthony, let's rewind a touch. What is the Future Fund? What was it set up for? What does it own? How does it go about things? Okay,
the Future Fund was set up by then Treasurer Peter Costello in 2006 with $60.5 billion contribution from the government. So the government had some surplus money at the time. It was from a combination of budget surpluses, proceeds from Telstra's privatisation, and there was also, it still had a stake in Telstra, which it transferred over to the fund too. Now, James, it's not a superannuation fund, right? So this thing manages money on behalf of the government and ultimately all of us Australians. It was designed to help, though, with the government meet its unfunded superannuation liabilities for the defined benefit pension liabilities of public servants and former public servants. Now, James, under the defined benefit system, and this is important, so the scheme, so in this case the government, has an obligation to pay a pension. How it does that is completely up to itself, right? It's not like the actual people in the scheme have a claim over the assets that income's going to be derived from.
Gotcha.
Now, James, there's an act. It's the Future Fund Act of 2006. There's a board of guardians that oversees the Future Fund and a big investment team. The responsible ministers are the Treasurer and the Finance Minister who have the power to tip in more money into the fund, appoint and remove members from the board, and issue the Future Fund mandate. Now, the mandate, James, is to try to make at least CPI plus 4 to 5% a year.
Gotcha.
Now, to do that, it invests in all the same stuff as super funds and sovereign wealth funds globally. It's turned that seed money, that $60.5 billion, into about $230 billion as at September. 38% of it in equities, 13% private equity, 11% credit. Pretty standard sort of stuff. This week, though, they tinkered with that mandate to also require the Future Fund Board to have regard to national priorities in its investment functions. Like you said, James, energy transition, residential housing, delivering infrastructure, the undisputed big 3 themes. We talk about them all the time, James. Yeah. So tell me, who's up in arms about this, James, and why?
Well, you'll be shocked to hear, Anthony, that the opposition's not too happy. And I guess what I would say characterise most of the criticism from is coming from the people who set up the Future Fund. So Peter Costello, he was the 3rd Future Fund chairman, and the chairman up until this year was set up under the Liberals. So the Liberals sort of hold this near and dear, and they're the angriest. I think what they're concerned about, and I think this is legitimate, is that once you give the Future Fund specific directions, what you risk is that the next government that comes in will give it another set of directions. So, okay, housing, renewable energy, infrastructure, reasonable thought bubbles, but they're not without risk. No one's really investing in housing at the moment and turning a good buck, particularly at the institutional level is what I mean. So super funds aren't really doing that. Even renewable energy, returns have been really up and down, volatile. People are still trying to figure out how to get in there.
Globally.
But then, yeah, globally, that's right. Then roll forward. I mean, we've got an election next year. Let's say the coalition gets in, the Greens, they might have three very different priorities that they want the future fund to look at. And so you've got this long-term vehicle that's supposed to be thinking 20, 30, 40, 50 years into the future. Every couple of years, it gets another sort of edict from government. Hey, do these three things. Hey, no, do these three things. No, these three things. So it's this politicisation of it, interference with it, that's got people up in arms. But Anthony, is there a case that Chalmers is entitled to make some tweaks?
Is he entitled to? I mean, well, legally, yes. This is very different to directing a super fund to invest in a certain thing. Morally, I'd say yes. These are the three big issues. Is it the right thing to do? Directionally, James, and I'm hanging out in the breeze on this one, this thing was met with the most predictable backlash, like straight away. Don't touch the future fund, and I get that. I mean, one of the reasons it's worked is that it has been able to invest in what it wants to. It's sort of been left alone. The responsible ministers haven't fiddled with the mandate, and it's much easier to argue that's the right path to take. But, James, do we really think that the future fund is apolitical? I mean, the chair is Greg Combet, who was appointed in June this year for 5 years. Who's Greg Combet? Former Labor government minister. The former chair before that, appointed in 2013 by the then Treasurer Joe Hockey, was former Labor government minister. The former Treasurer himself, no less, Peter Costello, one of Hockey's former bosses. Before that, James, there was a chairman in between David Murray and Costello, David Gonski. Wasn't there for long, appointed by Labor. He was fresh off a major school funding review for the then Rudd government. Didn't stay very long. He jumped over to ANZ. So, I mean, you can't tell me these appointments don't have at least the smell of political appointments about them. I mean, it's not that hard to find someone to run a $200 billion investment fund and balance sheet, James, in Australia, yet for some reason they keep finding these political sort of characters to do it. And in terms of what Chalmers has done, I mean, he's directed the fund to have regard to three priorities, and I don't think anyone would dispute that these are the three priorities of our time. Whether you vote red, blue or green, I think you care about housing, energy and infrastructure at the moment. So we have a bit of a dual mandate, James, like the RBA with inflation and full employment. Like you have the future fund now directed to maximise returns over the long term and have regard to those national priorities at the same time. It's still got the same benchmark. It's still the CPI plus 4 to 5%. I mean, the fact this has happened 6 months from an election, James, in a cost of living crisis, and Chalmers is banging on about it, smacks of politics, and I hate that. I hate it. Let me assure you, I hate that. Sort of that short-term handouts, short-term decisions. I absolutely despise it. But is there anything wrong with trying to use the people's money, and that's what this is, the future fund, to make Australia a better place to live? You know, if the required investment returns are there. Remember, it's still got the dual mandate, James. Now, I don't know. I expect that you might take umbrage with some of the stuff I said, but I mean, what do you think?
Oh, I don't think there's anything wrong with it until there is. And I think that's the problem. Like, yeah, okay, they all sound pretty good, residential housing, renewable energy and infrastructure. But just a little thought experiment. What if you got a Trumpian government in and they wanted to, and their focus was energy security. And they just said, we want the future fund to help Australia drill, baby, drill. Go out and find as much fossil fuels as you can and exploit it as much as we can over the next 3 years. That's our national priority. Would that be for the good of the country? I don't know. I think there'd be a much bigger debate about it. So I think it's a bit of a thin edge of the wedge thing. Once you get in and you decide, well, this is the national priority, then you've got the government's got lots of levers they can do to go raise some taxes, make some spending decisions. But do you need to get the future fund involved in it? I'm not so sure. They might, if there's big returns there, they'll get involved in it naturally. But directing them, I think Chalmers has opened up the can of worms here. And I just think Labor might not like, and future governments, future oppositions, future generations might not like what comes out of the can of worms.
Quick question for you, James.
Yeah.
Do you think the reaction would have been different if the government took a surplus? Like, remember we had a $15.8 billion surplus last year, sold an asset, say Australia Post Parcels Arm, for example, and handed that money to the Future Fund and asked it to manage it under a dual mandate type structure, maximise returns and have regard to national priorities?
Perhaps, but Anthony, the government's done that. Well, the government's given the Clean Energy Corporation a bunch of money to go invest in renewables. Why does the Future Fund need to do it as well? The Future Fund's got a specific purpose. Let the Future Fund do the Future Fund stuff. Let the Clean Energy Corporation, with its knowledge and experience and in-depth skills in that area, go and prosecute that case for renewable energies. I mean, set up a different fund. But the Future Fund came to life with a very specific job. It's had bipartisan support for 20 years. It's been left to its own devices. It's done a great job of thinking about the world and explaining to the public about how it's going to invest. And now it's got to overlay these priorities. I don't know. Maybe you're right. Maybe there's a middle ground, but I come back to that point. If the Future Fund saw big returns in these three areas, it would and is already in them.
James, I just reckon the Future Fund's become a bit of a protected species. Every second week we say on this podcast, Australia's superannuation sector is fantastic, but that doesn't mean it can't be better. We say it needs to pull up its socks and be better. Why can't the Future Fund be better? Like, it seems to be above reproach. You know, you're not allowed to do stuff like this. And the returns, James, they're not so knock it out of the park fantastic that this thing shouldn't be looked at. Like, yes, it's beaten its CPI plus 4 to 5% benchmark since inception, but the super funds returns, and I know it's not apples for apples, they're better. If you look at Australian Super's High Growth Fund, which has the same sort of target, it's done 9% a year over the past 10 years. The Future Fund's done 8.2%. Now that 0.8% a year, I mean, it's very, very meaningful over the long time frame, James. So I don't know. I just worry, like, as soon as you hear Future Fund or anyone doing anything with it, it becomes really political, and you just get all this like shouting from the sidelines that, you know, it should be left alone.
Yeah, I think that's because it's supposed to be apolitical, Anthony. I think it's the reaction to this is one thing that's supposed to be, you know, sort of above all that, and now it's not going to be above all that. So I think you can't have it both ways. You were saying earlier that you hate it when politics gets into these institutions. I think there is room for every institution to improve, but you know, I just wonder if this is the way to improve it.
No one blinked when Greg Combay was appointed chairman. Like, it's anyway. All right. So James, you wrote that ironically, the Future Fund CEO Raf Arndt has been warning of the changes from increased government intervention to investors. Do you think he'll have to change his approach much?
I don't think so. I guess the one thing is he's written countless position papers, or the Future Fund's written countless position papers. He's given countless speeches on where he wants the Future Fund to go. Now he's just got this extra overlay. Mm-hmm. I wonder, is that a distraction? Can it work into their existing processes? I imagine the answer is probably somewhere in between. But it's just an extra thing to think about. You know, you tell anyone, you know, we want you to prioritise this, they have to dedicate time, resources, energy, money to it. And so, of course, it'll mean he has to take his eye off the ball he was focused on, ever so slightly. Is that going to be to the detriment of the returns? Probably not. But let's see. I think it's a different ball game for the Future Fund, and that will mean a change.
Sure will. Okay, James, let's move to our second topic this week. And mining giant Rio Tinto released what you've told me is the most important corporate document of the year, a review into its attempt to address sexual harassment, racism, and bullying across its workforce by dramatically changing the culture, particularly at its mine sites, where some disgusting behaviour was occurring. James, the report shows Rio has made some progress, with about half of its workers saying they've perceived an improvement in the way harassment, racism, and bullying are dealt with, but actual instances of the stuff are largely unchanged. Now, the fascinating part of this report, James, was the backlash to Rio's attempt at cultural change, with some men claiming they feel left behind and some women essentially saying it's made them more of a target. James, it sounds like there's a battle of the sexes raging here, and this report highlights it. Is it a bit of a mess in there at Rio Tinto?
I think it is a mess. But this is the reality of trying to change a culture and trying to tackle these really serious issues. It's going to be a mess. It's going to be really hard work. It's going to be controversial at times, polarizing at times, but that's the nature of the beast here. And I give full credit to Rio for publishing this report, getting out there and talking about it. None of it's all pretty ugly stuff. None of it's comfortable, but Rio's come from a difficult place where they've had this problem. They had the problem with Juukan Gorge where an indigenous sacred site was blown up a few years ago. And Rio knows it needs to win social license back. So it's taking a leadership position here. And yes, it is a complete mess. They have made some progress. They have raised the level of conversation, but they're having this issue, yes, as you say, where you've got men who feel that they've been left behind, who say that they're guilty by chromosome. And then you've got women who are saying, you know, I wish I'd never been as part of a female leadership program because it's put a target on my back. The men think I'm only here because I'm a woman, not because of my skills. So, but to me, this is, it's not pleasant. It's, as I say, it's difficult, but this is what it's like in real life. These are the real life conversations that are being had, and Rio's done a good job, I think, of putting them in the spotlight and saying, hey, this we're not where we need to be, we're not where we want to be, but this is how we're going. This is what it actually looks like on the ground when you try and address these things. I mean, what I find interesting, Anthony, is the broader context. The backlash from men is something I think we've sort of seen from the likes of Donald Trump and Elon Musk. They've been attacking diversity programs in America for the last few months. Is there a bigger story here, do you think?
Poor old blokes, huh, James?
Yeah, well, that's a good point you raise, Anthony. Proportion of males at Rio operational sites, 80%. Poor
80.
old blokes. 80.
Yeah, you're right. I think the biggest story is about change, how change, like it or not, creates winners and losers. One of the big shifts in society, obviously in the past 50 years, is the role of men and women, you know, at home, in the workplace, relationships, whatever. That's been a game changer in Western society, James. Like, compare your life to your dad or your grandfather, or compare your sister's life to your mother's or grandmother's. I mean, with that, expectations around everything changes as well. That change creates backlash and you have blokes feeling like they're losing. So, as you said, in the US, which is probably the best example of this, more US men are voting for conservative Republican Party than ever. You know, it was a big reason why Trump re-won the election to the White House. Sort of men's preferences for Republicans over Democrats really skyrocketed when Trump first came onto the scene in politics. It stayed through that next election when Trump lost to Biden, and then it's going again. So that's the backlash to social change. Rio Tinto recognises that in its report. James, I thought it put it really nicely when it said, evidence shows that such resistance is a sign that significant systematic change is occurring rather than incremental tweaks. So it's all part of it, isn't it, James? Like you got to.
That's right.
Rio Tinto says, take comfort from the backlash. It shows that the change is actually coming. The key thing, though, is you need to be able to convince people that why you're changing is compelling enough to actually push on. And they obviously think that why is compelling enough. James, what do you think Rio needs to get right to pull off this cultural change?
Well, if you read the report, Anthony, it's all about what happens at the supervisor level. So, you know, the Rio CEO, Jakob Stolzheim, he can say, this is what we want to do. The board can be right behind it. The top level executives, even the boss of a particular mine can be right behind it. But until it gets down to the supervisor level and you've got supervisors of small teams on board saying, yep, this is what we're trying to do, and calling out bad behavior, calling out bad comments, making sure that women and other genders and other races feel like they're respected in those small teams, then it's hard to embed this change. So I think that's the next stage for Rio. And again, they've completely sort of admitted that and addressing it. And they're 2 years into this journey. I mean, to expect that you'd be able to pull this off in 2 years is unlikely. It's probably a 10-year, maybe even a 20-year thing. That's the next sort of frontier about this. So, Anthony, we are seeing a lot of attempts at cultural change around the place. Even at the home of the AFR, Nine Entertainment Network, we've got a We've had some well-publicised cultural issues. It's not easy to do. Are you a bit sceptical when you see these cultural programs?
You trying to get me fired?
Not at all, not at all.
James, yeah, I'm skeptical. I mean, organisations trying to change culture, stamp out sexual harassment, racism, bullying. That's not something in itself that should be celebrated. I mean, if you weren't trying to do that before, what were you doing? That should be a core part of every manager in every organisation's job. It's so basic. And if any board member doesn't realise that culture is a very core principle, then they shouldn't be allowed to go on that next Silicon Valley trip, James. And they shouldn't be allowed to go to the board meeting over in London that happens to be at the same time as Wimbledon. So yeah, James, I'm hugely skeptical. I think companies just throw lip service at this to try and get themselves through a PR disaster. But in this case, James, Rio Tinto, to its credit, it's showing a real consistency and an admirable commitment to its self-flagellation. It really is a hallmark of CEO Jakob Stausum's era. I mean, this report, like 2 years after the first one, really shows it, and it's the tip of the iceberg. I mean, I don't get to go to Rio Tinto's mines and really see what it's about, but every interaction I've had with Rio Tinto, I'm always surprised how much they flog themselves over this cultural stuff. It's unlike any other company I come across. It's just amazing. So yeah, I've never seen any corporate remorse like it. So at least at Rio, it seems to be genuine.
Yeah, I agree. All right, Anthony, we'll come back after the break. We've got a great question about government waste. Back in a sec. Well, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Okay, Anthony, bit quiet on the data front this week, but a few interesting points. On Wednesday morning, we get the minutes from the Federal Reserve in the US, who cut rates last month. And I guess we're looking for some clues into what they're going to do in the next few months. It seems like with Trump coming in and the US economy running hot, they're backing away from rate cuts. But let's see, I guess.
Yeah, good luck, Fed.
And then on Wednesday around lunchtime, we get the monthly inflation indicator. Anthony, you wrote about this week. The RBA predictions for the next rate cut are being pushed out. I can't believe this, but people are abandoning the February rate cut ship that I've been sailing for the best part of a year now. Where's the consensus going? Consensus
is definitely going towards May, James. Now, I'm not sure that's necessarily a bad thing for you because we consistently see the pack gets this one wrong. So yeah, in May. So by then we'll have had obviously we'll have had 4 months of the new year, but most importantly we'll have had a quarterly CPI number for the first quarter of next calendar year. That comes out in late April. 2 weeks later or so, the RBA board meets. So economists seem to be clustering around that May meeting for rate cuts, but the economists, James, just like us, they're making it up as they go along.
Well, they'll have another data point on Thursday night too, when RBA Governor Michelle Bullock speaks at a dinner in Sydney. So we'll see what she's got to say. Probably based on what she said in the last few months, not going to give too much away. All right, we love questions here at the podcast, and this week our question's from Brian from Sydney. If you've got a question that you want to send in, you can email us at chanticleer@afr.com, and you can also send us a question in audio form. Just record a voice memo on your phone and include your name and where you're from and email it to us. And that is exactly what Brian's done.
Hi Chooks, it's Brian here from Sydney's Northern Beaches. I really enjoyed your conversation last week about government efficiency. It seems to me that there are huge savings to be had though, just by applying good governance and enforcement on the many government programs out there. There are billions lost each year to scams and fraud. NDIS, $6 billion. ATO GST, $2 billion. Medicare fraud, hundreds of millions. ATO payroll, hundreds of millions. Childcare benefit fraud, the list goes on. As a taxpayer, I'd much prefer stronger checks and balances on all government programs rather than a quest for efficiency that leads to layoffs, lower service levels from the public sector, and probably even more fraud with less resources to close down the scammers. So how do you guys think about the balance of efficient government and appropriate governance and enforcement? Keep up the great work. Thanks.
Anthony, this is a vexed question, I think. I mean, on the face of it, of course, we don't want scams in any of those areas, NDIS, ATO, GST, Medicare. I think we want good enforcement. We want people to pay their fair whack and others not to free ride on the system. My only bit of caution, Anthony, is the robo-debt scandal. Now, that was an attempt to claim back money that was apparently misspent, but it was so ill thought out, so poorly executed, so unfairly, uncompassionately executed that it just makes you nervous about enforcement more broadly. Perhaps we need to get over that and accept that there is better ways to do this with appropriate guardrails. But it's tough, isn't it, Anthony? It can go bad.
Yeah, well said, James. I mean, I think Brian's more probably making a statement than asking a question here, and I think the theme of it, what he's saying, is right. You know, I mean, it is. Politicians love coming out designing these new things and everything, but it's the way that they actually are implemented, the way they're policed. I mean, that's what determines whether they're successful or not. And you know, all this stuff that he mentions, the Medicare, NDIS, all that, trying to keep it on track. It's a huge job of government, and one that we all want to see them do.
Yeah, I think we've seen eligibility and administration of the NDIS tightened up. That is one thing where you have a big pot of money, you do get nefarious elements. And what worries me, Anthony, is the people who most need NDIS support don't end up getting the right amount of it. So we want these things to be well run, but we want them to be compassionately run as well. So I think you're right, Brian, there's definitely room for improvement, but we've got to do it in the right way with the right guardrails around it. So maybe the future function.
Why not?
Well, Anthony, it's been another big week. Thanks for joining me on the podcast today. We'll see you next week.
Thank you, James. Have a good weekend.
If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com. You can subscribe to The Financial Review, their daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, and it was produced by Alex Gow and Lap Van. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.